4, 3, 2, 1. Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit highly appreciated cryptocurrency, NFTs, businesses, real estate, save a failed 1031 exchange or a business so you can create and preserve more wealth, or help your clients, friends, and family do the same. I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, wealth, cryptocurrency, and leadership minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He is out of the great Taxifornia state, and he has an distinguished background. He's the president and chief investment officer of the general partnership team at Castle Funds. He has extensive experience in portfolio management, derivatives trading, and risk management. And for the past 10 years, he's been the managing member of 3 private investment funds, which invest in equities, options, exchange-traded funds, and commercial real estate. He actually began his career as an options market maker for Group 1 Trading LP, and a few years later became a partner at Oppenheimer, Noonan, Weiss. Our guest was instrumental in the negotiation of the sale of a big company and so much more. Please welcome to the show with me, Peter Eberle. Peter, how you doing?
Good, Brett. Thanks for having me today.
And for those who want to get in touch with Peter, even right now, you can go to castlefunds.com. We're talking about building your digital currency investments, and it's going to be Peter's story from where he came from in kind of the traditional investment world to the cryptocurrency investment world, and doing it at a very high level. But Peter, for those who are just getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, so I got my start in finance, trading options on the Chicago Board Options Exchange and on the Pacific Exchange. As you mentioned, I started work on it with a small company called Group 1 Trading, and then started a partnership with 3 others. We built up a firm to where we were able to sell it to Goldman Sachs, and then I ran Goldman's trading operation on the Pacific Exchange for several years before going into private fund management. In 2017, a group of us became very interested in cryptocurrencies, and we decided to start a fund at first just for our own use. It was very difficult to navigate on-ramps into the crypto world. You couldn't put any substantial money into this space, and so we started a partnership, and we got more and more involved. We now use futures and options on futures to hedge some of the volatility. We are what's called a commodity pool operator, so we're fully regulated by the National Futures Association, and we currently manage 2 funds for accredited investors in this space. And it is an exciting space, especially this year. It's been very, very interesting.
Amazing, Peter. And we're talking about that, the current state of Bitcoin and even cryptocurrency as a whole, what's happening, and then how Peter and his team are helping people to create and preserve more wealth. And again, that's castlefunds.com. That's castlefunds.com. But before we go to all of that cool stuff, Peter, I want to take one other step back. You know, I think we've all been given certain gifts in this life, and these gifts have been given to be a blessing and help to others. Some people call them strengths, some people call them superpowers. But I want you to go back to maybe the high school days, Peter. And I want you to remember that time. You're getting to know yourself. People are maybe coaching you, or teachers, or parents, or whatever. What are the gifts that you believe you were given, and how does that help how you help and bless people today?
Interesting. Nice curveball there. I think a lot of what I learned in life came from sports competition. Played a wide variety of sports, but was really into tennis during my high school years. And I think it's an interesting sport in that you're part of a team when you're representing your high school on your tennis team, but you have to actually be on the court by yourself, right? And then it's the matches you rely on your teammates to also be competitive, and so you learn a lot about yourself. In certain team sports, you can hide in error possibly, but when you're out there on your own, you really have to make the right decisions. Or suffer the consequences, and I think unfortunately, we learn more from our losses than we do from our victories sometimes. And I think that carries into the financial world as well, right? I mean, we can we can gloat about our successes, but really, when do you learn? You learn when you're faced with crises. And so I think navigating crises is important. I mean, right now in the US equity markets and in the crypto markets, we've seen an incredible sea change since the beginning of the year, right? I don't think in January, many people expected that we'd be facing the headwinds that we see today. And I think there's a lot to be learned from that and how you act in times of stress. So that's I think plays a lot into this.
Absolutely, Peter. Thanks for sharing that. And that makes I learned a lot too in sports. And so it's interesting. You put you're on a team, but yet you're individual, right? And how tennis was a big part of your upbringing and with competition in sports. So now let's dive right into castlefunds.com and basically, what's the number one secret to building your digital currency investments?
That's a multifaceted question, but I think what we've seen this year is not unusual for cryptocurrencies, right? We've seen a tremendous drawdown from the beginning of the year, from the highs back in November. But this has happened before, and now we're down around 21,000 for Bitcoin. A few years ago, would have seemed incredibly high. And here we see the news headlines once again, oh, Bitcoin's dead. All this is not. This is so healthy that it has to come down. I'm going to give you a real good example. I mean, when I got into Bitcoin was 2017, and it had a high of almost 20,000 that year. And by the end of 2018, it had drawn back all the way to 3,100. So an 83% drawdown, massive, right? And thoughts
83%. Wow, that is incredible. And now, but now, what is it about right now?
We're down about 70% this year. We also had a drawdown similar in 2014 where it was down 65%. And then 21, we had a drawdown that was down 53%. So volatility is part of this. Definitely volatility is part of Bitcoin. Bitcoin's here to stay. Volatility is here to stay. And so managing that volatility through a diversified portfolio outside of cryptocurrency, actually the volatility helps build a more diversified portfolio.
Got it. Okay. So that, I guess it's first thing is the context of what's actually happening, right? And taking that in context, and then also the long-term investment of Bitcoin and how it's here to stay. So once you kind of have that basic framework, what's the number two secret to building your digital currency investments?
The conversations that I've been having with people lately, I mean, a lot of people that we've been talking to for years realize that this is an opportunity, right? This is an opportunity to get in at 20,000. The other day I saw a cartoon. It was like at a trade show, and there was one booth that had Bitcoin at 64,000 with a huge line, and the other booth had Bitcoin for 20,000 and no line at all, right? The herd mentality of, oh, it's making new highs, got to get in. But here's the thing about timing, right? None of us have a crystal ball. We don't know whether Bitcoin can go down a little bit further or whether it's going to rebound right away. So one of the strategies that some of our customers employ is really dollar cost averaging into Bitcoin. So let's say you have someone that has a large capital gain on a real estate project and they're doing a DST and they have this cash available. Now, most of our clients are allocating somewhere between 1 and 10% of their net worth towards Bitcoin. 10% is kind of the top end, and that's usually your younger tech savvy people. The 1% is more the people that are just dipping their toes in the water. So if a client, for example, wants to make an allocation towards Bitcoin of say 300,000, because market timing is such an important thing and that there's so much volatility in this space that a purchase one day could look fantastic or horrible by the end of the month, right? So you really, by dollar cost averaging, you take away that risk, that market timing risk. On the one hand, you're not going to suffer from fear of missing out if it goes up because you'll have allocated some money to it. So again, an example. So we have a 300,000. The client wants to get in over the 3-month period. They might allocate $100,000 this month. If it goes up, great. They've already made a profit on their 100,000. If it goes down, they allocate the next 100,000 and are able to buy more Bitcoin for that 100,000. And they do the same thing. And they do it consistently. It's a great way to get into equities. It's a great way to get into cryptocurrencies, but you have to be diligent with doing the plan, right? And when it goes down, that's the time you should be excited to make your next allocation, not be fearful and don't do it, right? So you really get that benefit.
Perfect. I think I got it. So, number one is look at the macro view and the long-term, viability of Bitcoin. It's here to stay, and those things. Number two is look at the opportunity for 20,000. Don't get suckered by the herd mentality of, oh, if it's a 64,000 a coin, it should, a huge long line. 20,000, there's no line, and then also realize that you might be 1 to 10%. Be prudent of that, not to over concentrate, right? And it might be, and on top of that, also dollar cost average, because there is such high spikes, high quickly and then low quickly, and that can psychologically or emotionally be tough, right? So figure out what's that 1 to 10% that you're comfortable with. Number two, let's just say it's 300,000. Then number three would be what's dollar cost average that over a period of time. Is that a fair summary, Peter?
That's a great summary.
Excellent. What is the third secret, if there's a third secret, for us? And it could just be take action, right? It could be something along those lines. But anything else you want to add to, or even so, let's dive into what castlefunds.com, how you guys are helping investors to do such a thing. Talk about your service and how you guys are helping other people do it.
Yeah, let me, before I get into the services that we offer, let me just wrap up on one other point, and that's you have to take chips off the table once in a while, right? I mean, everybody was so sure when we were making highs above 60,000 that 100,000 was just around the corner, right? And then sentiment changed. And so the same way that you dollar cost average into a position, it's also okay to dollar cost out of a position, right? Take some chips off the table when you get that huge gain. You're still happy if it goes up further, right? You're still making more money, but at least you've preserved some, and the next dip you're able to get back in. Now, as far as the services that we offer, cryptocurrencies have some unique properties in that the security of those cryptocurrencies is very important, right? Not getting hacked, not losing private wallets, all of that. It's actually quite complicated. And keeping coins on exchanges isn't the ideal solution either. One of the things that's not available to individual investors that are available for institutions like ourselves is third-party custody, where we actually custody the Bitcoin with a chartered bank and trust company. They keep the Bitcoin offline, so they're not prone to hacking. They have hundreds of millions of dollars of insurance, and we offer that service. All of our client Bitcoin are in third-party custody. Our funds are fully audited. The investor even doesn't have to check off the box that they're in the cryptocurrencies on their 1040, on their tax returns, which is now a question, right? The government wants to know. Because when you're a partner in our partnership, you're not directly holding the cryptocurrencies. You get a K1 from us so that you can do your tax returns. Obviously, in the DST, you won't have any tax consequence, but those are the services that we offer. As I mentioned, we're fully audited. We're regulated by the National Futures Association. And so we help our investors have exposure to Bitcoin without having some of the risks of having Bitcoin.
I think that's fantastic. So much there, right? Fully audited, and then with the regulated as well, which is amazing. You offer you give you the K1, third-party custody protection. Funds aren't on these exchanges that can be hacked. And you don't have to check that box. No one wants to check that box, right? So that's yep. Pretty cool, Peter. It's really amazing. And you also touched on dollar cost averaging out, which leads into the kind of the next segment, which is, what would you say is the biggest frustration when it comes to, either yourself or your clients wanting to exit these high positions when Bitcoin was near, $68,000, $69,000 a coin, and they have this huge capital gain stack. What's the biggest frustration?
Yeah, and that's, we see these people on Twitter, and crypto Twitter is very, very big, and they're all talking about how they're trading in and out of Bitcoin and all of this. And it's scary that nobody thinks about the tax consequence, right? I mean, you have to have special tax software that tracks every time you move cryptocurrency. If you have several wallets and you're moving the cryptocurrencies between wallets, the government may think that's a sale because they don't know that you control all those wallets. And that's something you have to go back and you have to prove to them what were actual transactions and what were internal transactions, right? And so we spend a lot of money ourselves to be able to track all of our transactions, buying, selling, moving from different custodians. that type of thing, it's very intensive. And for individuals to have to do that, it's almost impossible. I mean, there are some small investors that have done thousands of transactions that are going to find themselves in big trouble with the IRS. And then the other part is, even if you have perfect timing, perfect timing is far and few between, being able to sell the high and buy it back in. But if you're trading that way and you're selling and buying after you take in the federal tax consequence, right? At least the federal government would give you a break on long-term capital gains. But as you mentioned, both of us are here in California, and California doesn't give us a break on capital gains, right? They tax it the same regardless if it's short or long-term. So you have to be so right to be able to pay tax, invest your after-tax proceeds back when it's lower, let it go up again, sell it, and then pay taxes. It's nearly impossible to break both beat the market and the tax man. I don't know.
Yep. So can I defer capital gains tax on the sale of Bitcoin? The answer is yes. And we're about to talk about that right now with Peter. In fact, we're talking offline about this, and we have a deferred sales trust client that's looking at his fund and different ways to diversify from his real estate holdings. And what's really unique about the deferred sales trust, Peter, is that we can now exit highly appreciated cryptocurrency. In fact, we just did a couple deals before Bitcoin took a big hit here. At $54,000 a coin, we exited $5 million for a client. She worked for a big tech company in Silicon Valley, had about $50,000 worth of Bitcoin, then went to $50 million. She exited $5 at $54,000 a coin, deferred about $1.85 million to tax, and it's typically 20% federal. State of California is about 13.3, and then you can have the Obamacare tax of 3.8. So it could really add up to about that 37% mark, which is huge. And so what does that mean, Peter, for those that are listening, right? If you can now exit at the high and not have to suffer the tax consequences, defer the tax, and then be able to turn around and buy real estate at the low, or diversify into other investments, equity markets, or buy back into Bitcoin when Bitcoin hit 20,000 a coin, right? Or close to it. What can that mean for the industry, Peter?
I mean, that's an amazing opportunity, right? I mean, there's no other real tax vehicles right now where you can do that. To be able to actually take, as we said before, taking chips off the table when you've had a good run is so much part of the disciplined wealth building strategy. And both in equities and in cryptocurrencies, I think there were people in January that didn't sell because of the tax implications. So if they would have known about the DST and being able to do that, they would have locked in some gains. But I think people just look at it and say, well, I'm not giving up 40% of this, right? So it 100%. Keeps them from doing the smart thing.
Yeah, it keeps them from selling high and practicing what's called optimal timing, which is what we really focus on as our key value here at Capital Gains Tax Solutions. If anyone wants to learn more about this and how you can do this for your cryptocurrency exit, you can go to capitalgainstaxsolutions.com. Cat's capitalgainstaxsolutions.com. So Peter, the second part of this equation though is, can I defer capital gains taxes? I mean, we've scheduled that, but can I eliminate my estate tax? Because there's crypto billionaires out there right now, right, that have hit more than hit the lottery on crypto. I mean, they're heavy hitters, and they have billions of Bitcoin. And you look at that and you say, well, it's no longer just a capital gains tax challenge; it's an estate tax challenge, which is 40% on the death tax of anything that's inside the taxable estate. And so you can try to give it all away to charity, or you can try to gift it as much as you can to your kids, but you run out of those exemptions. So talk about the value of being able to exit. And we have what's something called the Deferred Sales Trust Plus that has no limit to it, that moves the funds outside of the taxable estate. To me, that's the biggest elephant in the room versus being have to suffer the 40% death tax. So what would that mean if what I'm saying is true?
Well, I certainly would like to hear more about it. I mean, everybody knows what the limitations are right now. There was fear amongst planners that the Biden administration was looking to really lower those limits. That hasn't happened yet. I believe the higher limits expire in 2025 before they go back significantly lower, which will bring even more people into that area where they'll have to pay a 40% estate tax.
Yeah, absolutely. And it's subject to the largest wealth transformation of the planet that's happening with the baby boomers, and it's happening right now. And so, if you want to learn more about that, again, you go to capitalgainstaxsolutions.com. But we can save, we can eliminate the estate tax by exiting crypto Bitcoin by using what's called the Deferred Sales Trust Plus. Okay, go to capitalgainstaxsolutions.com. That being said, Peter, are you ready for the lightning round?
Sure. I don't know what to expect, but let's go.
All right, knowing what you know now, if you could go back to your 25-year-old self, Peter, what's the one golden nugget make sure to tell yourself to do?
Start saving earlier. I think a lot of 25-year-olds, I was on the exchange and earning some nice money, thinking that was always going to be the case, right? But every career and every industry hits a rough patch. So don't spend all you have, put it aside. That's what I tell my 25-year-old kids.
Absolutely, absolutely. Second question, what's the number one book you've gifted or recommended the most in the past year?
In the past year was lightning round. I should have been ready for this.
Be the past 3 years, 5 years, 10 years. It doesn't have to be the past year.
Okay. Favorite book of all times is Sun Also Rises.
Oh, who's it by? I haven't even heard that one.
That's Hemingway.
I should have known that.
Hemingway classic.
Hemingway. Sun Also Rises. You learn something new every day. Excellent. Question number 3. What's the number one leadership quote or theme that you strive to live by?
I think that people prove themselves in adversity.
Love that, which connects to the tennis theme. I imagine you had some matches back in the day, right, where you had to face some adversity, you had to pull something through, and you did, right?
Yeah, absolutely.
Yeah.
And not always. I mean, sometimes again, failure is the greatest teacher, right?
Tennis is such a great game, absolutely. Second to last question, what are you most curious about right now?
Most curious about? Well, what does this economy look like in 6 months?
Absolutely. That will be something to really to take in. What does interest look like in 6 months? What does inflation look like in 6 months, right? What does the economy, what does jobs, what does the Ukraine, Russia, what does there's so many moving parts still to this day. Excellent. Last question, Peter, is this: after all your success, helping all the people you've helped, and building the businesses you've helped build, and the investments you've helped to others to build, how do you stay centered in your values, and how do you stay encouraged to charge forward to reach new heights?
There's two things. One is giving back to the community, seeing people that are less fortunate and really being involved in that. And I think that helps focus yourself on what's really important, right? I mean, we all have to make a living. Some of us have been extremely fortunate and blessed. And we have to remember that other people have other challenges, and we have to try to help them where we can.
Excellent. And for those who want to get in touch with you, would you mind one last time what's the best place for them to find you?
Yeah, peter@castlefunds.com. You can also do an investor inquiry on the castlefunds.com website.
Amazing. Hey, Peter, I want to thank you for being on the show. I want to thank you for using your gifts of overcoming adversity, pushing through, and helping people create and preserve more wealth. And encourage you to keep doing that. And I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. Also streaming, by the way, on Expert CRE Secrets, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way for you to exit highly appreciated Bitcoin, cryptocurrency, NFTs, real estate, businesses, public or private stock, so you can defer hundreds of thousands to millions of dollars of tax, maybe even eliminate some estate tax if you're ultra high net worth, so you can create and preserve more wealth or help your clients, friends, and family do the same. If you want to learn about how to get started, join our free mastermind. You can go to capitalgainstaxsolutions.com. You can also look for our new book that's coming out. It's called Building a Tax Deferral Exit Strategy. And it's all about helping you to build a deferred sales trust exit plan and wealth plan that makes sense for you. And it gives you the freedom and timing to do what you want to do with your funds without having to suffer the tax consequences. Look for that coming out soon on Amazon. As well, we have people like Kevin Harrington from Shark Tank in the book, which is pretty cool, and a lot of other really smart people. So that being said, thank you everyone for listening. Please rate, review, subscribe. And remember, it's no longer just about cash flow, it's about tax flow. Having a plan to exit is super important because taxes are going higher, and you want to make sure you're using that wealth to continue to build for your future. We appreciate everyone out there.